just let these persons in. Market structure is basically you are determining, which way the market is going in. And let me see if I could actually do a whiteboard on this. So I can just draw. All right, here we go, whiteboard. All right, awesome. So you're going to notice the market moves like this, right? And when it's like this, we automatically already know it's in a uptrending market, right? And how you'd know because you have let me just put a higher high right here. You have a higher high. Then over here, you'd have a higher low, right? So this is a standard, higher high, higher low, higher high, higher low, higher high, higher low. You automatically already know it's in a trending market. And that's when you would actually draw your trend line to determine, all right, cool, it's obeying the trend. Now, the market doesn't always have to move like this just to be in a uptrending market, right? So what it can do, you'd notice, it can move like this. So it isn't making, hold on, let me just allow this person to come in, boom. So it isn't doing like that, but let me undo. It's moving like this, right? It's making a lot of higher lows. So though it's still obeying the trend. It's making a lot of equal highs, yes, but it's still obeying the trend and doing a lot of higher lows. So it's still moving up. Then, of course, you destroy a trend line. And I want to show you all something, right? This is a very, 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 very good tool, which you want to use when you are trying to trap price, right? So let me just go over here to BTC US2 just for a clean chart, right? So let me take my Fibonacci off. So let's say we wanted to trap price, right? We want to make sure if it's respecting the trend or if it's obeying what we have put in place. So what you want to do is come to this section right here, right? My bad. You want to go to the first section where your tools is. I'm going to look for a parallel channel. So what you would do, you come here, right? You draw your trend. All right, boom. Now what you're going to do is going to allow you to bring it up. You come right. So we do it right here. And that's how we could spot breakouts. Now, a breakout is real simple. So what a breakout means is, let me go back to the whiteboard. I want to show you guys it. A breakout is when it breaks structure. So what happens is, right, let's say the market comes here, right? It didn't break the higher low, the initial higher low. It broke our trend line, but it didn't actually close man it or broke this. So it still is an uptrend market. It comes up, then it's going to retest the trend. And if it comes back down, boom, broke structure. So now you could say this is in a downtrending market, right? So it's going to be going like this now. So this is what the channel helps with. So if we have our channel set up properly, right? Just like that. Oh, sorry, I'm using a mouse pad to draw on this whiteboard. Ugh. But you get it. When you're drawing a trend line, you just want 2 wicks to touch, right? So you automatically already know whenever it breaks out of this, all right, it's still going up in an uptrend. Whenever it comes down here, it's going in a downtrend. So price, when it breaks out of our trend line, 50% of the times when it breaks out, it's going to close, right? Then it's going to come back just to retest the trend line, which is a new resistance, right? A new resistance. And then it's going to come and start going back down, trending down, trending down. Then of course you could easily track it. Now, the perfect entry. This comes with, of course, knowing your candlesticks. What you want to do is get in on the retest. Don't get in when it's going down, because you might get in right here, right? Then it does a big pullback, then it starts going down again. So what you want to do, we're going to be going over the Fibonacci tool, which you're basically going to use to measure retest, but not on this call, but I just want to show you an example. Wait, let me see if I can clear the screen. Clear all drawings. All right, boom. So I'll show you guys something. So this right here is known as the counter trend, right? Which is the retracement. And this right here is the trending. So what you want to do if you're looking to enter, you want to get in on the counter trend would be the perfect. So you have different levels on the Fibonacci, what we're going to be going over, which would be 32.8. Then you would have you'd have the 50%. You'd have the 61.8. And these right here are what I normally use a lot. Of course, the 61.8 as well. But these three right here, what I normally use a lot to determine my level of retracement, right? If it comes to the 32.8 or the 50%, it's definitely just going straight up. If it comes to the 61.8, what's going to happen? It's going to go like this, right? It's still going up, but it's not going up as fast as it would with one push for 32.8 or 50%. Now, let's go back to the market structure. Now, what you want to do whenever you're looking at, you don't always have to draw your lines. You don't always have to draw your support and resistance or your trend lines on each different time frame, right? But you want to have an idea of what the structure is. So as you can see right here, right? Lower, it's a higher low and you have your higher high. So it's going to, you want to keep drawing a line so you know when it breaks structure. So if market is trending up, right? Hold on, let Tanique inside the room. All right, boom. Can everyone see my screen? Drop one in chat if you can see my screen and if you can hear me properly. All right, awesome. So let me just go back to this. So whenever market breaks structure, which would be the higher high, what you want to do is start looking at your chart again because the market could be potentially going in a downtrend. Now, let me explain so you don't get pump fake out by the market. Because if you went through the market maker sections, you would realize, institutionals and banks, they stop hunt. So they know where you set because they've been doing this for so long, they know the average trader where they'd set their stop loss. So let me show you guys something, right? So like I was explaining, when it comes to, let me use a downtrending market, for example, now. So when it comes to a downtrending market, right, it's going to be like this. Now, what could happen? It can be like this. It's still going in a downtrend, but it didn't pass this yet, right? And what you want to do is you're going to draw a line right here, just like this. Just going to be more like arranging. So you're going to have, there's three different kinds. I want you all to take your notes out so you could write this. Drop a one in the chat if you have your notebook and if you're ready to take notes. All right, awesome. So there are three types of markets, right? Let me just type it out on this. So the first kind of market is a trending market. The second kind of market is a ranging market. And the third kind of market is a choppy market. And what you want to do is stay out of it when it's inside a choppy market. Now, how do you know if it's in a choppy market, right? Of course, I'm going to demonstrate all these on the trading view just so you all can see. But the ranging view, the trending market is what all of you already know. It's when a market is trending. Let me just wait. I just use this eraser, right? Oh, here we go. Awesome. All right. So trending market, draw. Trending market, of course, when a market is trending. Ready? You could tell when it's trending, right? Now, the second kind of market is a ranging market. That's when you notice when the market comes like this. And of course, in the major market patterns, which you all probably should have went through, the rising wedge, all these other different things to spot the market, right? You'll be able to determine, right? Market will be moving like this, just hitting support and resistance. There's no one really in control. So it's a 50-50 between the buyers and the sellers. Now, of course, you would draw your support and resistance and then use other tools to determine when the breakout would be. Normally, it hit 3 times on each side, then it'll probably break out, It might pump fake you out to make you believe it's going to be an uptrend when it's really in a downtrend. So you want to use more than one indication. Don't just go based off, all right, it broke resistance, I'm gonna buy now. No, because what the market could do is pump fake you out, right? It comes up here, next candle forms, you have a bearish engulfing, comes down. It starts going straight down, right? Broke structure. So you just technically got pump faked out. But this is a ranging market. So let's go back to the, I got rid of, here we go, awesome. Now, the third kind of market is a choppy market. And this is when you can't determine which direction a market is going in, right? So it could be doing something like this. Now, it doesn't have to be big movements like this, but it can be just a bunch of different candlesticks, and you can't determine who is really in control of the market, right? You have a bunch of bullish, a bunch of bearish, no real candlestick patterns, nothing there to determine, all right, which direction the market is going in, who's in control. And when it's like this, you want to stay away from the market. Now, here's something I want you to write down, right? Never force a trade. Never ever force a trade. What you want to do is wait for a setup. I know you may be desperate. You know, you might just get a new sign up or a new enrollment, or you have a new friend you're trying to show it to, and you'd be like, bro, you could make, you know, I could get you earning money today. And, you know, he's desperate, or you may be desperate to make some money. And you would be like, I need to make some money. Just wait, be patient. Trust me. Don't force a trade. No matter how desperate you are, you need to be patient. Let me just delete this. Now let's go to the chart, show you guys actually something. Share screen. Does anyone have any questions? You could ask inside the chat box. You should be able to see it. None for now. Awesome. So what I want all of you to do, we're going over the indicators, right? But since you're on this call, I want you to make sure you have these moving averages on. So you want to go to, just to get these moving averages, right? What you want to do is go to FX for indicators. You want to put in moving average. And what you want to do is just hit the favorite, so it could be inside your favorites. I know look for moving average exponential as well. You start as well, so it could be in your favorites, and you add it. Now, once you have the MA, you want to go to settings, and you want to change the input, the length, to 21. All right. Then you go to style, and you change the color to red. Now, of course, you could always adjust the thickness of the line. It's totally up to you. I keep it on 2. Sometimes I put it on 1 based on amount of markups I have on the chart, just to keep it as clean as possible. So you want to do that. And what you can do, you just come here, save as default. So whenever you put MA on, it's going to automatically adjust to these settings, right? Then you want to go to EMA. You go to the settings. Then you change the color to blue. It should be already blue. You make sure you select your thickness based on how you want it to look on your chart. You go to input, you make sure it's 8. Then you save it as a default. So whenever you put the EMA on, it automatically comes to this. And I'm going to just briefly show you what this is, right? Let me just take off ADX. Now, what this does is helps you determine how the market is trending. Now, whenever the red is over the blue, that means it's in a down trending market. Whenever the blue is over the red, it's in the up trending market. Now, don't use this on a 30-minute time frame and to be able to determine, you know, which direction the market is in, because you will be confused. All right. So let's get back to looking at a trending market. So what I would normally do is call a top-down analysis. You should have learned about this, right? So write this down in the notes as well. Top-down analysis. Now, what that means, right? Whatever time frame you're going to be looking at to determine your entry in the market. Hold on, sorry, fam. I just was looking at GU, trying to see where that is on the chart. All right, cool. So what you want to do is mark it up from, let's say, 2 time frames ahead or 3 time frames ahead. So because I enter in on a 4-hour, I normally mark up from my monthly. So it would be, I mark up monthly, then I would do weekly, then I'll do daily, then I'll go to my H4. Then I might go to my H1 just to look at some entries. Of course, I still go down to the 30-minute and to the 5-minute time frame as well, but I don't mark up on these, you know. I just use these to look for clean entry, see how the market is behaving inside the candlesticks. So remember, in one daily time frame is 24 1 hour candlesticks. In an H4, there are four, man, give me a second. Oh yeah, there are 4 1 hour candlesticks. So that's really easy to remember. In a week, there are 7 daily candlesticks. And of course, in a month, it's based on whatever that month is. So real simple to remember, right? And what you want to do is color code how you're going to be marking up your chart. So this would be easier for you to remember. Like, all right, cool. What does that color line mean? And I'm going to show you how I color code my chart. And you want to color code it based on the background you have so it's visible. So for monthly, I would use a green. You don't have to use these colors, but I'm just sharing with you how I do it. So monthly, I use a green. Weekly, I use a purple. My daily time frame, I use an orange. For my oh my bad, I don't use an orange for my daily time frame. I use a red actually. So my daily time frame, I use a red. My H4, I use orange. Then for H1 and random lines, I use blue. So this is just how you would be able to actually, determine how. Oh, sorry. Let's see if anyone's trying to join the call. All right. No. Awesome. All right. Cool. So I'm gonna send a message again inside this. All right. Cool. So what I would do is first determine on a monthly, which time. All right. Cool. That's why it's so important to have your alert set. Let me just go over here. So as you could see on this time frame, I definitely marked it up. So like I say, green is what I do my monthly, right? So I drew my trend line. And as you can see on the monthly, it actually broke structure, which is a confirmation. And it's coming down to retest, right? On the monthly for this trend line. Then I have on a weekly as well. So my weekly, remember, it's a purple line. Now, because I already had my green trend line from the monthly, there was no need for me really to draw a trend line in the purple. It's common sense. You could see right here. And the more you know, the less you mark up on your chart, what makes it better, right? All right, cool. Let's let these persons in. So, like I was saying, the more you know and the better you come with recognizing candlestick patterns, trends, and all these other different stuff. Let me just close my trades. Yeah, so the more you recognize these patterns, the less you're going to be drawing up on your chart. And this makes it easier as well because what you're not going to be focusing on is supply and demand zones as well, along with the support and resistance. But we're not going to get into that. We're focusing on the market structure, right? So keep it real simple. You want to identify the current trend. You never want to trade against the trend because, like I said, the market does pullback. So what could have happened is it could be a downtrend, right? And the market is doing a pullback. And you're thinking in your head, all right, it's an uptrend of market. I'm going to do a buy and I'm aiming for 200 pips. Cool. The market could have done a 50 pip pullback, come back down, boom, blow your account. So it's real important to identify these stuff. So you draw your trend, cool. You go down to the daily time frame, you recognize what the trend is. As you can see, like I said, it broke structure, came back down to retested it on a daily, and now it's going up in an uptrend. As you can see, I draw my trend lines. Then you want to go to the 4-hour time frame. Well, this is for me because I trade on the 4-hour and the 1-hour. Now, if you're trading on a 1-hour, you do the 4-hour daily and weekly. So where it was on the 4-hour, right? So on the 4-hour, I came to look to see how it was behaving. I drew my trend line, it was there. Then of course I connected. You could be able to tell it's a double top right here if you look at it. And then right here, I also drew the trend to show if it broke structure. It did broke structure. It's coming back to retest it. That's where we got the sell from, the crazy sell. And that's where we're getting a buy from. So as you can see, I'm expecting a buy here if you saw the buy limit. But it's real important to have market structure determined so you can recognize it. And for most persons, you may not, it's going to take time probably for you to recognize it. So when you draw a trend line, right, what you want to do is use what we call, I'm sure to access it because I have it as a favorite over here. What you want to do is come over here. Sorry, you want to go to shapes. Once you go to shapes, you come down to eclipse. You could just start and it show up on, you just basically just want to start whatever you use the most. So if you're using the eclipse a lot, you start, it's going to show over here. So you click it. What you want to do is just point out higher lows, higher highs, or where the market probably did a reversal, right? So right here, it hit trend line. So you go market for wick. Then if you just want to just keep using it, you just copy it, right? Copy, paste, boom. So you don't have to keep going back inside the toolkit. And you could just mark it up, right? So you see where it did a higher low. Of course, I did a market gap right there. Market closed that day. So, wow, this is crazy. And this is how persons predict gaps in the market as well, by using these simple market structure patterns and different stuff as well. So you would see sometimes they would send a trade idea over the weekend, right? And you'd be like, whoa, why are they sending a trade idea on a Friday if the market is about to close? Cool. When you see Monday comes, TP1, TP2 smack. And that's because they already had their analysis set to know which way the market is going in. And of course, you're going to say, all right, cool. How am I going to know this is going to happen? How is this going to happen? We don't know the future of the market, right? And that's where it comes with the trader's mindset. You have to be confident in your trades. So when you enter in a trade, you have to be comfortable losing your money, right? Don't enter in a trade with money you can't afford to lose. So don't drop a 0.10 if you have a $50 account. What you need to do is drop a 0.01. You set your 50 pip stop loss, 30 pip stop, 20 pip stop, whatever you can afford to lose, and just let the trade play out. So here's something I also want you to write inside your notes. I'm going to give everyone a chance to grab their pen and their book or open up their notes tab on their phone. This is real important for you to remember. Let me just go to a clean chart just so I can type this out for you to remember. Set and forget. I need you to write this down in your notes, all right? I'm explaining what this means right now. I need you to drop an 8 in the chat if you have written this down already. What indicators are used to make sure it doesn't get faked out? We're going to go over that on the indicators training. We're having a deep training on every single thing that we use. Also, the world truly confluence. Crazy strategy that has helped me profit like crazy. It's definitely going to help you all once you focus on 1 to 2 pairs, because now you can easily recognize what's going on, right? All right, so set and forget. What it means is pending orders. I don't know if you notice, we've been setting a lot of pending orders inside the group. Buy limit, buy stop, sell limit. And what this does is, because you predict the market is going to go to a certain place, right? And you don't want to miss the entry. You want to get the perfect clean entry, or you're not going to be there. And you could be a person working straight throughout the day, right? You mark up your chart, you set your pending orders, and you go about your day. Like, it's that simple. That simple. You set your pending orders and you forget it. You forget it because you don't have to worry about, oh, it's going to blow my account. Because remember what I said? Never risk what you can't afford to lose. Never risk what you can't afford to lose. And that's when it comes to even funding your trading account. Don't fund what you can't afford to lose. You need to be comfortable with losing in this market. If you're not, you're going to keep blowing your account. Keep blowing your account. And you know, that all comes with discipline as well, right? So let me get rid of this. I'm gonna just go over a brief indicator with you guys quick. Was gonna save this for the when we go over all the different indicators, right? And it's called an ADX, and it's helped me for the past 10 trades. And what you want to do, this is right here. Of course, you see I have all my the indicators that I use start. So what you want to do is type in ADX, right, in the indicator list, and you want to look for ADX and DI. You start it and you just click it, right? You put it on your chart. Now, I'm explaining it briefly. It's real simple. This is going to change your trading game. This is going to change it. I'm telling you. Now, what you want to do, right? You want to come here and you want to make sure your horizontal line is on 20. And how you do that is you just go here, you go to threshold and make sure it's on 20. You want to also have a 25. So what you want to do, you come here, you go to your horizontal line, you come down on this chart and you just bring it on 25. Now, we can't probably get it exactly on 25, right? So I'm going to show you how to get it exactly on the number 25. Once you click it, you go to settings, you erase all this, you put in 25. Easy. What you want to do is do a dotted line as well. Dash line. I want to change the color to black. Boom. Okay. Now, I'm explaining these real quick. So the green line, matter of fact, your settings might not be the same color. So your style, right? Your D positive, you want to make green. Your D negative, you want to make red. And you just make sure everything is black. Wait, my settings aren't saved now that I said that, because my lines are thick. So of course you just want to make sure it's thick where you could see it. You don't want to make it too thick where it makes your chart dirty. So I normally have all my lines a bit on 2, just so it's easy for me to spot, especially when I'm on my phone. Then you just click save as default and it's there. Boom. Now what this black ADX line does, right? It tells us how strong the current trend is, meaning the D positive or the D negative. So when it's all the way up here, that means it's real strong, right? Now, whenever the green line, which is the D positive, is above the 20 and the 25, it's a strong bullish market. Whenever the red line is over the green and the 20 and 25, it's a strong bearish market, especially if the ADX is all the way up, and it's letting you know the strength of the current trend. Now, the further apart the D positive and the D negative is, the stronger the top line is. So how these are separated is showing you it's strong, but we're not going to base it just off a one time frame, right? Because I'm on a weekly. I'm going to go to the monthly, see what it says. All right, cool. Go to the weekly, separate it. It's pretty strong. Go to the daily. It's crossing, right? Go to the 4 hour. The red, as you can see right now, is currently above. So that means it's really a strong bearish at the moment on the 4 hour chart. You want to go to the 1 hour as well. Let's see what's going on. Cool. So as you can see, that's 2 different time frames. Well, 3 confirm that it's in the bearers are in it's a bearish market. The sellers are in control. Now, like I said, you never base your entries off of one indicator. You never base it off of one indicator, right? And what we want to do is get used to not using so much indicators. But that's where the confluence comes in, so we could confirm where our trade is. So let's break this down real simple again. Keep in mind the D positive when it's above 20 and 25, and also the red, which is the D negative, it's a bullish market. When the red is above the green, which is a D positive, and the 20 and 25, it's a bearish market. It's a strong bearish market. And when the ADX is high, because the higher the ADX line is, that's a strong, that's the term how strong that market is, right? Cool. Now let's get back to market structure. Real simple. Now, trading a trending market, right? There's 2 kinds of move. You have the impulsive move and you have the retracement move. So as you can see right here, this is a trending market, and how you could determine it? Well, that's on a 1 hour time frame. I would normally do it off of 4, right? You would just use your trend line to connect what you call your current trend, but you could use the parallel trend to create a channel. So you'd come here, come up, connect that dot. All right, boom. So you just need 2 wicks to touch, right? I'm going to wick it out right here. Boom. Now what's going to happen, I could easily drag this up. I just need 2 wicks to touch. Remember that, right? Just need 2 wicks to touch. All you need is 2 wicks to touch. All right, so I'm going to base it off these 2 wicks right here. Now, what this does, it allows you to identify breakouts easier. So as you see right here, like I mentioned, where you could get pump faked out, right? So as you see, it broke up above the channel, right? A person might think, all right, cool, I'm gonna enter it on a long. I'm entering on a long, which means long means buy, short means sell, right? So I'm entering on a long. Cool. When it enter in, right? Serious drawdown. Came back up. So you might have more buyers actually getting, right? And what happens? Boom. tanked. Yo, people probably blew their account on this trade if they didn't know what was going on. So the channel helps you identify breakouts. And what you want to do is when the market finds a new resistance, you just draw a line, right? So as you see on the 4-hour time frame, the candle close, it wicked. It wicked the new support, right? So what you would do is just draw you could use a trend line just to make a random line to make this your new resistance, right? Or what you can do is just use a horizontal rate. And what a horizontal rate does, oh, I didn't click it. Sorry, let me just go right here. So you just draw it into the future. And what a horizontal rate does, because I'm on a 4-hour, I'd make this orange. You always want to color code your stuff, right? But let me just delete this. I want to show you what a horizontal rate does. So what a horizontal rate does, it doesn't bring it into the past, it only brings it into the future. So you go to the horizontal rate and you do it from right here. Super simple, right? Now it draws the resistance line to the future. It changes color to orange. Now what you want to do is monitor the breakout on this resistance line. So as you see, the market found any resistance, came down, it tested it, came down, opened back up, tested it. So as you see, it's playing in this area. So what you want to do is watch out for the breakout from this resistance line. Real simple. As you can see, it tanked. So what you could have done is you could have been like, all right, cool. If market gets below, how can I put it? Gets below the candle where it first broke into the channel again, I'm going to enter it on the sell. Cool. What you could have done, enter into the sell, you write it down. And you just get out. You could have aimed for 20 pips, right? So you could have come out right here. Real simple. So you might have say, oh, look at all that money left on the table. Don't worry about what money left on the table. You want to secure your profit. That's what's important, securing your profit. So let's go back to the whole channel, right? So this channel right here automatically tells you it's in an uptrending market. And as you can see, every time it hits support, goes back up, boom, hits resistance, goes back down, and you still see it's in a current trend of market. So what you could have done is, of course, just drag this into the future. As you see, it keeps going up to determine when it breaks out. Cool. Broke out. And as you can see, the moving averages crossed over. So in the crossover right here, and of course, you can look at the candlestick patterns. You have a doji as well, which indicates indecision in the market. So that's why it's really important as well to learn your candlestick patterns so you could be able to, let me just look at my trades real quick. All right, cool. Got stopped out of the market. Stop loss hit. So it's definitely going to go down to those buy stops. All right, awesome. So as you could see, it crossed over right here, right? So the red moving average came over the blue. So that tells you it's in a downtrending market. That's a next confirmation that it broke structure. So this is what it means when it breaks structure. It breaks your trend line. So this is how you track price, right? So in an uptrend market, always remember you have an impulsive move and a retracement move. Impulsive move, let me get my arrow. This is the impulsive move when it acts off of the retracement. And this is the retracement move right here when it comes down, right? So you're always going to notice trending markets have, oh, what's going on here? All right, I'm going to draw a new one. Trending markets have the impulsive move, then they have the retracement move. So channels is real key. I would use it more on my MT4 app than my trading view because I really have a lot of markups on my trading view, right? So what you're also going to have is a ranging market. So let's see if I could find a ranging market for you. Still wouldn't consider this one. So this right here could be considered a choppy market, right? You can't really tell who's in control. So it's stay out of markets like that. I'm just looking for a ranging market right now. But yeah, I'm just going to 1 hour time frame. I find it better there. All right, beast. So right here, you could say we have a ranging market, right? And how you do that, you just draw a trend line. You just remember, like I say, you just want to connect 2 wicks. Copy it, paste it, draw it down again. Just need 2 wicks to connect. So we either draw it this way, or you could have drawn it from down here. Based on when you started looking at your chart, of course, that's what determined when you really draw it, right? So as you can see, it hit resistance, came down to support, hit resistance, and it finally broke out. So ranging market is just when the market is consolidating, right? Moving sideways. And how you would know when to get in, you just want to wait to see when it hit support or when it hit resistance. That would be the perfect entry. So what you can do, of course, is just set your alerts if you want to get in early, or you add an alert, and you mightn't click the exact price you want, right? So you could just move your crosshair right here, just to look for the price you want, and you enter it in right here, and it just automatically goes to your price. You put your message in here for what you want it to pop up and say. So you could put EU sell now. Real simple, right? Or see something inside the chat box. Can you repeat that, please? My Wi-Fi trip. Say it again, bro. Your mic dropped. What was it that I was saying? Oh, I went over it again. All right, awesome. That was a while ago. Sorry, man. The chat box doesn't pop up right away. The indicator. All right, awesome. Now, for those of you that are in Nassau, I'm going to be briefly showing you the World Truly Confluence that I came up with that I will be covering next week. But that right there basically covers the whole market structure reloaded, right? So, you know, it's not just noticing the high and lows. You know, you want to is a bit more detailed. You want to draw trend lines. You want to draw channels. You want to be able to actually trap the price to determine, you know, what's actually going on inside the market. Did it break structure? You know, we want to determine these different things. So like, let's look at the candlestick, right? So as we have it right here, cool. Now what we could say is, I wonder if I could draw, let me see. All right, brush. So, right, it came from the line, but did it close? Cool, it closed, then it went up again. It broke structure. It broke the structure right here. It closed above it, came back down. It's always going to retest, right? And that's when you want to look for your entry. Bounce off it again, which was the new support, skyrocketed. So this when the Fibonacci tool comes in, measuring the level of retracements. And remember, like I say, the market always does pull backs. It did a little pullback here, consolidated for a bit, shot up. So real simple, you know, that's everything that covers market structure itself when it comes to that. And it's a next note that I want each of you to always remember, right? There's a lot of you need to put this inside your skull. You guys have a hard problem listening. So you want to make sure you are well rested. Cool. If you aren't well rested, you want to make sure you are focused. Don't look at me because I'm focused, right? Okay, cool. So you want to make sure you're well rested, you're focused, and you're fueled. Now, fueled means you have eaten, you are probably drinking some coffee. You know, want to make sure your body is fueled. Wait, I didn't spell this right? Oh, just space. It's like, damn, I'm falling off. All right, cool. So want to make sure you're well rested and focused. You need to put this in your journal. If you have it already, put it again. Because you need to make sure you're well rested, focused, and fueled so you don't be doing foolishness on a chart. It's like when you're driving on a road, right? And you're sleepy. And you keep, you know, dipping while you're driving. You almost get an accident. You don't want no accident with your money in the market, I'm telling you. Especially if you don't set stop loss. So that covers the call for tonight. Does anyone have any questions? I'm just allow everyone to unmute themselves. How do I do that? All right, here we go. So I allowed everyone to unmute themselves. Does anyone have any questions as to what was presented tonight on the call? You could feel free to unmute your mic if you want to talk. All right, no questions. Awesome, awesome. So The next call is going to be at 10 p.m. Basically going over Instagram again. Is going to be 2.0. Just to go over everything again from the first day on Monday. And then we're also going over Canva, how to connect your links, how to set it up properly, highlights. Going to be a quick 30-minute call. Make sure you taking notes, just so you could also be able to just write down the links. Resend the 10 a.m. link, the 10 p.m. link. Go inside the important channel, the important calls channel, in the welcome section on the Discord, and you'll actually be able to find it. But that ends the call for tonight. I appreciate all of you for hopping on. Hope you all got value. If you got value, just let me know. Drop a 1 inside the chat, because I might be just repeating a bunch of stuff that you probably already heard. All right, awesome. So see you all in the next call, family. Take care.